I've been working in property for over 5 years now, and I have to say, the government are making it really hard for landlords to make any money, which is why supposedly 40% of landlords are getting out of the market this year. So how do we find deals still that make £40,000 for people in just 3 years? Well, we analyse over 2,000 properties per year, and we've come up with a simple process and framework to help us calculate whether a property deal is going to be profitable and going to make us a good amount of money in less than 5 minutes. So in this video, I'm going to explain the 6 numbers that every investor needs to understand in 2025 in order to make money. And I'll talk you through a deal that we're looking at the moment to actually help unpack for you how this calculation actually works. By the way, if you want to run these figures along with the video, you can access the calculator through the link in the description completely for free. So I'm going to go through the 6 numbers that you need to understand, and I'm going to do it by using the a deal that we've been looking at recently and been negotiating on. So you've got a clear idea of how to actually implement this and how we stack it in our everyday deal stacking analysis. So the first thing that we need to be looking at is comparable prices. This property is a 2-bedroom house. Now, if you look at the floor plan though, if we did a little bit of jiggery pokery with this room by putting in a stud wall here, then we create a little hallway. Granted, this room would be very, very small, but we then could turn it into a 3-bedroom house with a lounge and have a bathroom there. Alternatively, one thing that we could do is have 1 bedroom, 2 bedrooms, and then have this as a bathroom upstairs. So you still have a 2-bed house, but with a bathroom upstairs. Move the kitchen into where the bathroom is, and then have 2 reception rooms. So the reason why I say this is because when we're looking for comparable properties, we're looking for like, okay? Now, the way that I do this, the way that I look for like, and what we're doing when we're looking for this is looking for properties that have sold that are similar, because we want to work out what this end value is going to be, okay? So we've got here a 3-bedroom house sold in September 2024 on Lord Street for £196,000. So I'm going to click on that, open that up. We've also got number 9 here that sold in 2024 for 130. These ones look a bit more like 172. The reason I'm not clicking on this is because if you look at that, and if you look at this, they're not for like. They don't look like the same type of house. So although we've got terraced houses, 3-bed terraced, they're not these sort of stone, kind of brick-built houses that look similar to the one we've got. Okay, then we've also got 2022. This is about as far back as I go to 150,000. Okay, so I'm going to look at all 3 of these, starting with the oldest. So we've got £150,000 is what this property sold for. It looks very similar to the one we've got. It looks like it is not as bad condition as the one that we've got, but it's definitely not maxing out the value, is it? And also, this was over 2 years ago that this was sold. So we've got £150,000 as one example. We've got another 2-bedroom terraced house. That's important. We've got a 2-bed for £172,000 that sold 2 years ago now. It's crazy that January 23 was 2 years ago, but 2 years ago, 2-bedroom terraced, and I'm sure you'd agree, this looks like it's been done very nicely. Looks like they've gone kitchen at the back, 2 reception rooms, bedroom 1, and then we've got bedroom 2, very small, bathroom, no bedroom 3. Okay, so they haven't gone into the attic on this one. So interestingly, they've got 1 big bedroom, a small bedroom, and a bathroom. Whereas what we'd be doing is having 2 large bedrooms across 3 floors, across 2 floors, the first and the second. And that's over 172 2 years ago. So number 9, 130,000 sold more recently, but no pictures internally. Normally when there's no pictures internally, that suggests that there's tenants, which again, with the to let sign, also suggests there's tenants, or that it's in terrible condition. So we'll go to this next one, 3-bedroom, £196,500. Okay, so it's in okay condition. It's in good condition. I wouldn't say this is bad condition by any means. It's got a decent sized garden, which ours doesn't. So you've got the bedroom 1, bedroom 2, bathroom, bedroom 3, and 2 in a kitchen and a living room. So slightly different to what we've got, but it's interesting to see something more recently sell around that sort of figure. So What I'm looking for is properties like this, terraced houses that are done up to a good standard, because what that's doing is that's giving me comparable ideas of what this property will be worth once it's fully renovated. And as you can see, it is not renovated yet. It needs a full back to brick renovation, which I'll go through in a minute. But we're looking here at, I think, based off of the comparables that we've got, we're ranging from sort of 130 to 200, and that really is a big range of properties that have sold that are tenanted, maybe not in great condition, all the way up to properties that are slightly different, but very, very good standard. We've got a very similar property, that like for like one that sold 2 years ago for 172,000. I think it'd be very safe to say that this property, once it's renovated, will be worth 185. Okay, that's what I think. So we're going to go with a comparable price, and when I say comparable once it's renovated, to £185,000. The next thing we want to be looking at is the potential purchase price. Now, we've got this here as a listed price of offers over £110,000. This number, this wording here, offers over, ignore it. In fact, this purchase price here, just ignore it. People get so bogged down with a purchase or an asking price that they never bother exploring the deal. Now, the reality is, if this hasn't sold, then people aren't buying it for the price that they want, which is the asking price. An asking price is literally only that. It's an asking price. It's not a sold price. It's not a, this is what we have to get price. It's an asking price. So negotiation needs to come in. We need to work out what it is we can get this property for. So what I do is I'd be calling up the agent and I'd say to them, is there any movement on this price? Can we do anything? Can we get round, have a look at it, and work out what we can do? Now, I actually negotiated on this one. This property is sold for £100,000. Now, I figured that out from the viewing that I did, the conversations I've had with the agents, the conversations I've had with the sellers. So I know from my own due diligence where this property sits as what we could actually get it for. Now, the next number that we need to be looking at is the renovation costs. Renovation costs are underestimated by quite a lot of people, overestimated by a lot of other people. So what I tend to think with something like this, especially Midlands and above, a full back to brick terraced house where we're going to be putting in new boiler, central heating, everything, we're working on a basis of about £40,000 on something like this, because we need new windows, new front doors, everything. There needs to be a replaced roof at the back of the property. So there's a lot that needs to get done. If you did it really cheap, you could probably do like 35,000, but most of the time you're going to be about 40k. Now, the way that I figure that out is repetitions. I go to properties and I've done many assessments of properties before. I know what things cost. If it would be helpful to have like a property renovation calculator, then let me know in the comments, because I might actually build that and add that to the property investment playbook. But in the meantime, what you can do is you can ask for a builder to go around. If you wanted to get photos sent to them, like send them this, and then also do a video highlighting any major like cracks, damp, anything like that, to give them the best way of giving you a quote. Better than that would be for them to actually go to the property. So if they can come with you to the viewing and give you a price there and then, that will give you your renovation budget. The next figure we want to be looking at is all about how much we can get in once we've done it up, and that is the rental figures. So what we're going to do for the rental figures is we're going to come down to here where it says property sale history. We're going to click on nearby sold prices. We're going to get the postcode itself, and we're going to jump up to rent a property, properties to rent. I'm going to paste the postcode in there, include let agreed properties, and I'm going to go within half a mile. Now, if you want to, you could also mention that it's houses. You could also put a particular number of bedrooms, but I'm just going to keep it quite loose for now and see what comes up. So the reason I do half a mile as well, when it comes to sale prices, I'll do quarter of a mile, but rentals just don't come up as often. So the numbers to calculate that's a little bit more tricky. So we've got 2-bedroom terraced here in what I would describe as a rentable condition. It's just your bog standard magnolia walls, brown carpets, pretty dated kitchen. It's not great, but renting for $850 or on the market for $850. You've got a 3-bedroom semi, which isn't really like for like, renting for £1,000. Again, not in the world's greatest condition. 3-bedroom terraced, renovated slightly better, in my opinion. for £1,000. I think the rent on this, from local knowledge and looking at it, it would be about £900, maybe £950. You might be able to push £1,000. If you did it, it's obviously specification led. If you were to do it really high end, then a brand new, freshly renovated house does go for a premium. We could potentially be pushing the £1,000 mark. But if you're unsure, what I always do is I'd speak to 3 letting agents. I call 3 letting agents in the area. If you want to know where they are, go to Find Agents, search the postcode, and go to Lettings. This area within quarter mile. Start the search. Oh, let's go half a mile. Oh, let's go 1 mile. Here we go, we've got some. So I'd be contacting these agents and I'd be calling them up and I'd be asking them, if we were to get a property that is a 2 or 3 bedroom terrace done to a really high standard, freshly renovated, what could we rent it for? And get 3 people to give you a price and work out what the average is. That will help you get an idea of what your rental figures will be. Now, the next number we need to be working out is year-on-year growth. When it comes to property investing, in investing in passive buy-to-lets, one of the main issues people have is that they don't factor in the reality that the property is going to go up in value over the long term, at least. And people jump to, what is, I'm making £250 a month profit on my rental property. That sucks. That's nothing. Well, you're also forgetting that the property, if it goes up, if it's a £150,000 property and it goes up by 5%, you've made £7,500 a year, which gives you an extra £700 per month. Now, what I use to work out what the capital growth is and the expected growth can be is I look at the past. The only way you can work out what you're going to do in the future is if you look at the past. Now, Property Data is a fantastic platform. I'm not sponsored by them or anything like that. I should be, but they're a great platform to use if you want to be looking at more kind of refined data and information about the property market. So they take data points from all over the place and use it to provide some really, really helpful tools and information. So I've searched SK15, which is where this property is located, and it gives us things like asking prices, sold prices. And if I go over here, in fact, if I show you things like activity, right, it goes to show what the activity levels are like in the area. You can see usually is the case, it kind of dips in the winter months and it bumps up in the summer months, that sort of thing. So it's got all sorts of data that I think is really, really helpful. But if I was to go over to this growth page here, you can see it takes the percentage of price per square foot in growth. Now, the reason why they do price per square foot is because if you've got a 3-bedroom terraced house and a 2-bedroom terraced house, but the 2-bedroom terraced house was twice as big as a 3-bedroom terraced, the 2-bed would probably be worth more. So it's worth going on a price per square foot basis. Now, if you look at this, again, we've gone for the SK15 postcode, and the population is 27,000 people. There's 11,800 homes. And if we go here, you can see last year was a 4% growth. Over the last 3 years, there was a 6% growth. And over the last 5 years, there was a 27% growth. So if we want to take the best average, what we do is we get a 5-year perspective of 27%. I'm going to get my calculator. 27% divided by 5 is 5.4. So we've got 5.4% per year, which moves us on to our final number that we need to be working on and figuring out, because it will help us do our calculation at the end of this video, is what is the expected price in 5 years. And my calculator kind of helps me out with this in terms of working the numbers. But if we were to work on that, if this property, once it was done up, was worth £185,000, and on average, it increased in value by 5.4%, that's given us £9,990 per year of growth. Now, interestingly, put that over a 5-year span, and we're looking at just shy of £50,000, which is really, really quite astonishing. So you'd be looking at then plussing 185,000 as the value. The value of the house would probably be worth 235,000 over a 5-year period. And the rents are going to go up. And really, this is the value of property. This is why I think it is so good, so worth getting into, because you're buying an asset that, yes, it cash flows positive every month, but you're not doing it for that. You're doing it for the long-term growth. You're doing it for the way that you can buy that £185,000 asset for 25% of its value and get 100% of the benefits of its capital growth. So if we were to then work on that, so we've done that final number, £235,000 is the 5-year value. Now what I want to do is I want to run you through my calculator. Now this is a calculator that I work with. This is one that I use day in and day out. So this property here is on the market for £110,000. We got it for, you can get it for £100,000, right? I think we can get it less, but let's say 100, okay? Now, here's in orange the numbers that I would suggest that you fill in. Everything else is formula-based. So 1,800 for your legals, including your independent legal advice, an optional survey or valuation fee of £500. The refurb, £42,000 is what I think it will be, but let's just play it safe. Let's say £45,000. End value, I think we're looking at £185,000 there. Bridging terms, I've got this set up to be pretty standard bridging terms, so we'll move on from that. I've got holding costs based on how long I've got the bridge term out for. So this is like, if your renovation is going to take 6 months, put in 6 months here, and it will calculate automatically a rough idea of what your council tax, gas, electric, water is going to be as well, and take those costs into consideration. The remortgage valuation, let's say 750 quid. The rent per month is going to be £950, we said. 5.4 is what we worked out, wasn't it? £9,990 of annual capital growth. With all that in mind, okay, if we go down here, it will take us to the calculations, the numbers, okay? And I'm not going to go through the bridge. I'm going to go through this to kind of show you how it breaks down the cash and the buy-to-let numbers. So this deal here, you'd be leaving in £13,687 if you bought the property cash. You need £150,000 to do it. Your ROI after refinance, this is just on the rental income, is 21.6%, which is great. Like that is a really, really strong rental percentage ROI. Now, if you include the capital growth, the additional capital growth, then your percentage goes from 21% to 95%. If you do a 3-year profit, as in the profit that you make by adding the value at the beginning, the rental profits that you're going to make month on month, and the capital growth profit you're going to make, you're going to profit after 3 years £72,000. Okay, we've got gross yield, profits, all those sorts of things. Those are the two numbers that I really want you to think about, right? And even as a buy-to-let, your monthly rental profit might be £512 per month. Great. You know, that is what it is. And your annual rental profit is £6,000 per year. But that goes to £16,000 when you factor in the capital growth, which takes you up to a 21.4% ROI. 8%, right, by the way, if you did this just as a standard buy-to-let and just worked it off of rental figures. The reason why I wanted to bring this up and why we kind of want to round up with this is these numbers are so important, because what you've noticed here, I hope you've noticed, is if you just work off your rental income, once you've refinanced £250, £300 profit a month, whatever it is, it doesn't on the surface sound great, but that doesn't mean that property isn't worth doing. People are like, well, it makes 8%. I can make that in an S&P 500. You can, but what you can't do in an S&P 500 is control the asset, and you also can't get capital appreciation. You also can't lend against the property, against the asset, to buy more stock, sorry. So here, rental income is one good thing, but your capital growth is the thing that's going to skyrocket your business. It's going to be the thing that skyrockets your wealth. And so even if all you're doing is sinking cash as a deposit on a ready-to-go rental property, a turnkey investment, and you rent it out, just the capital growth alone, plus the rental profit, is going to do you so much good. It's going to grow your wealth like crazy, but people seem to forget it. You can make 20% ROI, fine. But you can make 100% ROI when you also factor in that over 3 years, you are going to make, or you're going to generate wealth for yourself through the value of the asset going up over time. But if you're ready to get started and you are thinking about getting into property, then you might want to work out how to actually find these deals. And I've made a video that you can watch just here to work out exactly how to find deals that are actually so good, they actually sound dodgy. So if you're interested in that, you might want to click on the video.